Okay, welcome everyone to something like the 130th Systems Thinking Ontario, something like that.
Wow.
Yeah, so it's a couple, many, we're in deep. And on this one, we are going to be speaking with Jordan, who's joining us today. But in typical fashion, we'll just go quickly around the room. If some folks join, that's great, throughout the conversation. And what we typically do in our intros is just say who you are, and what brought you here this evening. So I'll just list out your name. You can go on mute and just introduce yourselves. So we'll start with Elena.
Hi, I'm Elena Leonard. I've been involved with Systems Thinking Ontario since the beginning, since when several of us were realized we lived in Toronto and we only saw each other at conferences.
Mhm.
And then we kind of, went on from what Peter Jones had started with the design with dialogue and kind of broke off and did the systems thing. At any rate, I do a lot of work carrying out Stafford Beer's BSM and Teams Integrity Exploration, and I'm looking forward to a Metaforum conference in early July, which you are all invited to, um, which is in Manchester, England,
Mm.
which will have an inexpensive hybrid option because Manchester Business School, where the conference will be, um, has very limited. They said they could do hybrid, and what they actually meant was that they could do Zoom instruction.
Right.
Uh, and so people can listen to all the presenters, they could ask questions in the chat, and they can present, but they can't actually take part in in the discussions if they're joining remotely. On the other hand, the remote fee is £50, which includes £30 for joining the organization. So it's
Mm.
like £20. Anyway,
Cool.
Hmm.
it'd be
Good.
nice to see some of you there.
Could
Yeah.
could you post that information through the
Yeah,
site here?
yeah.
Yeah, that'd be
Put
great.
it in the chat.
Hmm.
Listen, thanks for being here, Elena, and thanks for the heads up on the metaphor. Appreciate that.
Mm.
Donald, why don't you introduce yourself and say what brought you out tonight?
Well, yeah, I'm interested in this from I guess at least two perspectives. I've been somewhat involved with systems for a long time, but more seriously with this group for about a dozen years, which is close to the beginning. Um, And I'm also very interested in strategic thinking, which I used to do courses in, or I guess for several years in Ottawa. And I was always under the impression that systems thinking was a type of strategic thinking. That's the way I used to frame it, and that's the way some of the books I consulted put it too. So it's interesting to see it being featured as a step beyond, right? And I'd like to know about that. And I have another couple of questions about the use of systems thinking in I guess, the management of capital. I don't,
Hmm. Nice. Yeah, we'll definitely be jumping into that, Donald. So thank you for
Mhm.
being here.
Mhm.
Next up is Patern. Am I pronouncing that correctly?
Yes, pattern. Can you hear me?
Yep, we can hear you.
Yeah, great. So I'm no professional. I'm here because I'm curious about systems thinking, futures, foresight, things like that. Um, I've been interested in many topics for more than 25 years, including climate change and the sustainability of our societies and so on. So I'm here just because I'm curious and or in order to network and open to any opportunity to be useful anyway. I have background in sociology, woodworking, farming, and web development. Who
Wow,
knows?
awesome. Yeah, well, thank you for joining. Really nice to meet you. Looking forward to the conversation.
Thank you.
Yeah. Rose, maybe you can introduce yourself and just share a little bit about what brought you here tonight.
Yeah, hello. I've been I guess, dropping in on this group for many years, and I more frequently in the past, but now and then. And this topic really intrigues me. I bring a regenerative economics lens, and so I'm interested in sort of what forms of capital you might be dealing with, and how to sort of balance trade-offs in terms of beneficiaries in terms of the design. And yeah, I'll leave it at that for now. Yeah.
Yeah, no worries. We'll definitely jump into that. Thank you. Thank you, Rose. Griff, nice to see you. Maybe you can introduce yourself.
Always a pleasure to see you, Zad. Um, yeah, I'm Griff. Really excited to be here. I have been part of Systems Thinking Ontario for a number of years. I definitely remember the 75th one, so I'm almost at that halfway mark of, been here longer than I haven't. I think maybe before that too. Not sure. I'm a PhD student at the University of Waterloo, almost wrapping that up in sustainability management, focusing on strategy and complexity. So definitely lots of overlap there with you, Jordan. Really enjoyed looking at your thesis. Also saw that you cite our current prime minister just once, Carney. Thought that was really interesting. Had a little laugh about that. I'm also the country leader of Creative Commons Canada. So I represent the Creative Commons in Canada, talking about the value of the commons. And I spent a couple of years working on a startup that ended up doing a lot of trading in the markets. So I have like some visceral trauma related to investing, um, all the puts and calls and everything else. And yeah, really interested to see your thoughts on things. It could be that the attendance is a little lower tonight because there's a bank run happening and everyone is trying to get their pensions maybe sorted. Wouldn't surprise me given the week's news. Yeah, really happy to be here.
Well, nice. Good to see you, Griff. And I'm sure we can talk about the bank run as well, or maybe that will come up on designing bank runs or not undesigning. But speaking of banks, we also have Michael Schoss here. Why don't you unmute, introduce yourself, and describe what brings you out this evening?
Thanks, Ed. My name's Mike Schaus. I know this crew through SFI, Peter Jones, and I met Zad when I did that program. I joined because I'm interested in money and how it's made and what it's for, and really the focus of how I think about it is sort of at the intersection of where value meets exchange. I have been working at a bank for the last 6 years, but I'm no longer there, and I'm transitioning out to other ways to think about money. So just excited to be here and excited on the topic.
Oh, nice. Nice to see you, Michael. Yeah, thanks for joining. And lastly, Huda, if you are there, maybe you want to introduce yourself and just share what brought you out this evening.
Yes, hello everyone. My name's Hada Hassan. I'm currently a student in the Strategic Foresight and Innovation program. I will be graduating very soon, which is like at the end of the month. And I did my MRP on community investment cooperatives, which is like kind of a smaller emergent type of organization trying to keep money flowing within the local community. And I thought that was very interesting. And so I'm here to kind of learn more about, how is capital being, rethought through design. Yeah, that's me.
Wonderful. Thank you for joining. Nice to meet you. My name is Zad Khan. I'm a graduate of the SFI program, and I've been helping, Peter Jones, who, really had a strong role in organizing Systems Thinking Ontario, has since relocated to Mexico, where he's teaching out of there. So I work with David Ng and some others on organizing these sessions since graduating, and we've been looking at bringing in more recent grads and people who just talk about emergent fields. So it's my super pleasure to, I'm going to do my style of introduction of Jordan, but I'll let Jordan do his correct. But I was in the SFI program and I did 2 rounds of it because I connected with 2 cohorts because I was going slower. So I was in a group with Jordan on the second cohort. So we shared some courses together, and he is a fantastic, brilliant mind. And the main thing that everyone knew about Jordan is that he loves his 2x2s. So he would 2x2 anything and everything, whether it's breakfast or lunch or dinner or concepts or how to manage his kid's schedule. Everything was a 2x2. But it's great that then I heard that Jordan had gone and done his doctorate, his PhD. So we'll talk about that shortly. And that's when I was like, oh, we got to catch up. And why catch up? Why not catch up on Systems Thinking Ontario where we can connect the work? So, Jordan, why don't you introduce yourself as well? Give us a little flavor of where you're coming from, and then maybe we can get started. And I will say, though it's a small crew, you can already hear, Jordan, there's a lot of interest in like a bank perspective, ecological economics, community sustainability. You have a couple of different point of views that you might be interacting with, which is really great.
It's fantastic to be here. Thanks for inviting me, Zed. And yeah, it's not a surprise that there's such deep and thoughtful representation from different parts of the world. And I'm excited for what we can get into. But I guess the basic way I've described myself, in addition to being a capital designer, and we can speak about what that is, but I've always found myself either being the token designer in a room full of capitalists or the token capitalist in a room full of designers. And just like representing whatever viewpoint is missing in these rooms, and being both working at a ginormous pension fund and doing the SFI program at the same time, you could just imagine the tensions. And I think that was very helpful in sort of bringing this intuitive approach to the world and formalizing it with all of the rigor of systems that OCAD teaches, as well as the foresight and some of the other design tools. But I really never set out to be a designer. In fact, I started I did communications at Laurier, and then I went right to the States to do a master's in sort of like corporate reputation management. And this was in the States, right during the Obama election, the global financial crisis, the BP oil spill, right? So it's like automatically you're immersed in this environment where everything is breaking, and the narratives that we talk about really don't make sense. But at the same time, it has this opportunity, like using this tool as communication, to start to reframe, like, how are we looking at the world and what does this mean, and starting to make sense of it. So I would say I had this like inkling toward design before I knew what it was. Went to kind of just, I fell into working in the pension world because I started as a speechwriter to the CEO of Oxford Properties, which is the real estate arm of OMERS, so the pension for firefighters, police officers. And in doing so, and I think as fellow systems thinkers, you probably have the same experience, or at least this inclination of like, you just start to see the big picture, even if you're not trying to do so, and even if it might be harmful to the thing you're trying to accomplish. So as a speechwriter, if you've watched The West Wing or House of Cards, it's very much like you're the marriage counselor, you're the therapist, you are the person in these rooms at the end of the day when they're exhausted, and you're pushing them to be authentic, and you're really trying to help them make sense of like, what does it mean to be overseeing this like massively influential organization. So through that, as a speechwriter, or kind of having these chief of staff type roles, if you ever had these, you end up taking on things that no one else is really equipped to do, or they just don't have a natural home. So I was at Oxford during the rise of WeWork, right? So you have this essentially existential threat to this long-standing business model. And they said, Jordan, go figure this out. Like, what are we going to do? And I'm like, I can't do this alone, but I know there's a really interesting school literally down the street at OCAD. Like, why don't I go there, see if I can understand and get some more formal tools of like customer value proposition and, testing and like the basic nuts and bolts of, what is designed to try and solve this challenge. And then ever since then, like, it unlocked this whole different way of seeing the world, because I thought I was getting a education in sort of business model prototyping, and ended up stumbling into systems thinking as a formal way of seeing the world. And that changed really everything. And from then I started to look at the pension world and the institutional capital world as a series of leverage points, right? So they, it kind of reminds me of, I think in the 1930s, there was this like famous bank robber in the States, and they said, "Why do you rob banks?" And he's like, "Well, that's where the money is." And like I started just looking at the world around me and saying like, okay, where is the money flowing from? Like, where are these decisions making? So in the investment world, and we can talk about this, but I'm just kind of giving you the trajectory. Like, you have the individual investments, whether that's the stocks or the companies, and then you have the asset class, like sort of the broader bucket of how they start to pull these investments together, and then you have the total portfolio level, and then you start to have these, like, even above that, this concept of universal ownership, right? There's a point at which you have so much investment in the world around you, you are invested in the health of the global economy as a whole. There are risks from which you cannot diversify away from, and that totally changes the way you have to do basically everything. So just like this natural following, what is the highest leverage point that I can get to, just to, because it's interesting, and just because I think that's where the change is going to happen. That led me to say, I need to develop a set of tools, because there doesn't seem like there are any right now. And I'll leave it there, because we're probably going to talk about it. But at that point is when I saw the PhD, decided to dive in, also while working full time, using my experience as a case study through participatory action research to say, there must be a better way of doing this.
Right. Okay, so thank you for sharing that. I mean, I didn't even know about the speechwriting background. There's something that just rings true about that for that makes a lot of sense. And in terms of a film or TV style narrative, you've shared a little bit about the background setup context. Now let's do a time leap. So we're going to jump to the present and almost work backwards, we could even say. So you've recently completed a dissertation, and capital design was kind of the concept that you focused on. So just as a very introductory level of the conversation, maybe we'll get into that. Can you, Jordan, share what is capital design, and maybe just unpack that a little bit, and perhaps we'll get the conversation rolling from there.
Sure. Capital design is the actual title of my dissertation, and what this is like, what is the role of design in institutional capital allocation? That was the question. And the answer is, at least in the way that I've researched it, there are 8 specific capabilities when applied through this framework of either choice making or decision making, can really and materially influence the way that capital flows to virtually everything, right? And one of the fundamental pieces of me being able to map this, the space, was actually using a systems kind of just like feedback loops, and saying the increasing financialization of everything, plus the universal ownership where there's a small set of people that own effectively everything, is driving the systemic risk, which has implications on the amount of capital. And like, maybe to put it in context for, because it's a little bit counterintuitive, like once you get to a certain level, there's a step change and everything you know about the world flips. So a lot of design, as it's taught, is to turn basically like things into capital. Like how do you develop business models and all this stuff to like get money, and it's an interesting model. But at the extreme end, it's like, how do you turn capital into things? Like you basically need to have more investable opportunities, because these funds have so much money that they actually can't invest it fast enough. So you get this trend of financialization, where basically everything from like student loans to a bunch of freezers and Tesco, like everything becomes a business model, and everything becomes a way to deploy capital and generate a return on it. So it's like a totally different way of thinking that I found, like the way that design is taught today wasn't really thinking about it. In fact, no one was thinking about it outside of business and financial schools. But it struck me as I'm sitting with the CIO of a $130 billion company. I'm like, we're leaving out a lot of information about the world just because we can't neatly quantify it and put it into an Excel spreadsheet. That doesn't make much sense. The way that the world is presenting its opportunities to us, so I think about energy transition or data centers, or kind of like you name whatever societal trend, it's like that doesn't fit these old 20-year-old boxes, right, in the form of asset classes that we have. And we're trying to do these mental gymnastics. Like none of this makes sense. They're like, I feel like I'm crazy. I'm looking around, be like, we have the responsibility, not only at OMERS in this case, of the firefighters, police officers, transit workers, but like I'm talking to my peers in the other plants, right? Teachers, healthcare workers. I'm talking to other funds around the world, and everyone is sort of having the same problem. The way that we've termed it is like you're trying to put new information through old pipes. So I then said, like, well, I have this background in design. Surely someone has started to answer this question, so I'm going to do the lit review and just uncover the basics. And to my surprise, there was virtually nothing, right, that had investigated the role of design in institutional capital, which normally when you're doing a PhD, you're sort of like always pushing the ball forward like 1 inch, like, which is super valuable. In this case, there was nothing. And I like had so many sleepless nights that surely someone's going to come up and be like, oh, I already did the like cool dissertation. I did that 20 years ago. But to put design in the context of investment, because I mean, you can think about design on a timeline. Design historically started out in the context of production, right? So you can think about the Industrial Revolution in England and like, how do we actually design the physical things that inhabit our environment? How can we make them better? And then we switched into design for consumption, right? So this is more the business model design and like, how do we make Uber and things like that? And the hub of that was really in San Francisco. But design had not yet said like, what does it mean to actually design for investment? Like understanding what capital is, what capital can do, where it needs to go, what it expects, like these kind of relatively foreign terms. So that's what capital design is, kind of trying to take design into this new context of investment and kind of see it for what it is, which is not a law of physics. It's like a social construct,
Right.
just like you and I tell each other stories, which is, it's very, very scary to economists, but it's the most freeing thing because I think it gives this system view of the world and this design-minded understanding about how mechanics work. Like we can do so much with it, and it's just like we've just started the conversation.
Right. I mean, that is very revealing, and honestly, it is shocking that design had not been explored in something that is so essential to constructing our way of life. Like as you said, like usually you're moving your work by an inch at the PhD level, but here you are crafting what is essentially a field, a subfield in the design and capital space. So I find that kudos to you, but also, yeah, I can imagine that's pretty frightening. Um, but you touched on something just as a follow-up about strategic choice making and strategic decision making as it relates to the 8 attributes that you identified for what capital design can play. Can you talk a little bit about that differentiation and where that concept came up and why you find that to be pretty meaningful for this work?
Yeah, it's so you can simply say like design makes choices, business makes decisions. And in the financial world, it all these investment processes that exist for a very good reason, right? They have to be conservative, they have to be rigorous, they have to do something over and over. They are inherently optimizing functions. So they take a bunch of data as a starting point and then narrow to make a decision, right? Often buy or sell, which is great in most contexts when the world always looks a certain way, the information is standardized, like that's all well and good. That in no ways resembles the reality that kind of you and I experience today. So the benefit that choice making has is, or that design has, is like if we increase the starting set of options at the very beginning and put better and new information into this process, you're going to get far better decisions at the outset. But a lot of the challenge, and I'll send it to this group afterwards because I mapped the tensions between design and business. Like even just the way that if you're from economics and I'm from design, the way that we look at a piece of information is fundamentally different, even though we're both looking at the same piece of information. For example, information in design like wants to be free. Like you want to share it, and the more people who have access to it, the better. In the investment world, like in this decision-making world, that becomes a competitive advantage. The fewer people that understand what you're talking about or that have access to that information, the better it is for you. And there's kind of like 8 of these tensions that I started to map, even just for my own benefit, to say, why am I talking to these very well-educated and experienced people, and we seem to be looking at the world in a completely different way? So the capital design wasn't necessarily to say like, you should all become designers. No, not at all. It's like, let's just understand why we have these tensions and barriers, and there's probably a good reason for both, and then integrate them. So there are going to be areas where investment should lead, and there are going to be areas where design should lead.
Very interesting. Very interesting. And you said some of your work has been applied through like case studies, right? So you've actually taken this model to actual people working in the space and you've tested it with them.
Well, it was a bit of a guerrilla prototyping because
Okay.
that was my job, right? That was my job is being on like running investment strategy where you are not looking at individual deals, but you're kind of sitting back and kind of taking the systems view to say like, are we betting against ourselves here? Like, how is society going to evolve and where are future needs going to come from? And like, are we actually on the right side of history? Like, do these themes make sense? You're kind of taking the big view and just slowly through a translation, like basically just not talking about design or anything scary, but starting to increase the amount of information that these folks have from the starting point. But the one thing that really helped me and like tying it directly into systems was just understanding a institutional portfolio as like a set of nested systems. So maybe I'll take a step back and just kind of like if this is helpful, just in 30 seconds explain institutional capital. So and this is more of what I didn't study versus what I did. So I think a lot of people that when they see capital in capital design, they instantly think capitalism and they instantly think like the public stock market, which is not what I was looking at. So the Canadian pension plans are very, very unique in that they're able to directly own and manage private assets. So, for example, the world's largest operating nuclear power plant, or like different businesses that they can own and manage directly. And these are called private assets collectively. You have things like real estate, venture capital, infrastructure. And because they have this direct ownership, you can do very, very unique things. You could do things that you couldn't as a shareholder. And there's lots and lots of research already on the public market side with fancy equations. And that actually applies less and less on the private market side because it's more opaque. You have a lot of room for interpretation. And so I was very specific to focus on institutional capital because these are the folks that have extremely long-term time horizons. They're free of the kind of the swinging demands of shareholders. They're mostly, if not all, doing it for some like objective public good, like managing the pensions of hardworking firefighters, teachers, police officers, in the case of endowments, scholarships or insurance policies, or in many cases, the citizens of a country, right? So like these are a very small subset of investors that are able to make the types of changes that actually span 50, 100, 150 years.
No, that's amazing. I think I really appreciate you sharing that in that context. Maybe I'll just open it up so far. I mean, I have more questions and we can chat about it, but just it's a quick check-in. Is there anyone who has any comments or thoughts about capital design or anything else that Jordan talked about, especially for those who have some relevance to the field in the intros?
I'll take a shot at something here if you don't mind.
Sure. Go for it.
This is really cool, Jordan. Love what you're doing here. I have a question, and this is just me being naive, and I'm hoping you can just like educate me on this. Okay, the way I want to phrase this is, wouldn't a systemic view of investment at the level that you're operating at be something closer to like an ETF, like a broad market ETF? And I know, for example, I think it's Arizona's pension fund. Like they don't actually have very many managers. I read like a really interesting article about this. Like Arizona's pension is like one guy sitting in an office doing almost nothing from his own perspective. Like it's kind of funny. Like he's like playing solitaire because he manages the state's pension just with these like broad market ETFs. And he's like, yeah, the savings that we have from not having, however much staff, like there's a huge amount of staff in terms of needing to run all this stuff, is makes up any difference that we would make in relative gains of, making all kinds of different bets and investments and stuff. And I'm not saying that one is or is not better. Like that's not the conversation I'm trying to have with you here. If you have an opinion, that's interesting, but I'm just trying to like understand what the view of institutional capital is like on this and why that hasn't been more common. Especially like, for example, you said like the world's largest nuclear plant is a good example, just because as you know, like there's just like such huge cost overruns in nuclear in particular. Like nuclear is like notoriously difficult to manage and put out a reasonable return on over time, unless you've got the state backing you, I guess. So I don't know. Thoughts, feelings?
Sure, I'll start in kind of reverse order just because it's fresher in my mind. So in the case of OMERS, they own Bruce Power, right? So it is kind of one of the world's best, most well-run plants. Like every electron that they have is spoken for, and it's a reason why Ontario is this like leader in green energy. So I totally get your point in general. I'm not talking about some obscure like state-owned Chinese nuclear power plant. This is like it is objectively a very, very good investment for all involved. As a specific example, no, those don't come along too often, but it's like the type of thing that I don't think, other than an institution or a set of like-minded long-term investors, you could own something like that. But they have massive, massive investments in solar and all sorts of other renewable energy. But going back to your first question on, I think you're asking a cost question, which is not something that I was focusing, and I actually think it's from a systemic point, an irrelevant question, because you're talking about risk and return. And once you get to the level of like systems level investing, you're looking at risk, return, and responsibility. So you get to a certain point where you are reliant on the health of the economy as a whole. So if you're just investing in the market, chances are that one guy playing solitaire is judged on a relative benchmark, right? So whatever the market did, he's probably like 1 or 2 basis points up or down. And that's fine, but it actually doesn't make sense, because think about a pension plan. Like you have long-term liabilities, you need to pay pensions, and you know with a reasonable degree of certainty what that's going to cost. So there's a movement towards these like absolute returns. Like if I need to earn 6% for 50 years, I don't care what the market's doing. If anything, like it actually makes less sense to bet as a benchmark, because if things happen like right now, like the whole market's down 10%, you return -9, well, great, you've done amazing, right? Because like you're 1% above the market, but like looking at the world as a whole, everything is still in a far poorer condition. Or vice versa, like if the market returns 10 and you return 9, you still earned enough to pay your long-term pensions, but like you look like a fool because you've underperformed. So there's a fantastic book, and I was at a conference 2 days ago in New York on system level investing. Two gentlemen, Lukomnik and Hawley, and it's called Moving Beyond Modern Portfolio Theory. And it's not objectively written like with a systems, like it doesn't really mention systems, but it's so systems infused. And I think everyone on here, if you're interested in this topic, would love it, because he talks about the difference between alpha and beta, and how much of your return as the market gets more interconnected is just as a result of the market as a whole versus the actual things you do and the things that you pick. So he's making the point of like, whether you're a public or private market investor, would it not make sense to just do things that improve the health of the economy as a whole, right? Maybe that's fixing income inequality. Maybe that's fixing the environment. Maybe that's building trust in public institutions. You should probably just do that. And he calls it beta activism, which is like a really interesting term for like radically expanding what it means to be an investor in the things you are doing. So rather than trying to outsmart the next guy and trade hyper frequent and get inside information, you should just be using your governance positions to advocate for like things with the government that actually strengthen either industrial policy or just make things more productive. Like you now have this responsibility to the system and the market as a whole, because you end up kind of free riding on the ability of capital markets to be efficient. You can trade with other counterparties, but if that doesn't exist, you don't have a business, right? So it's a lot of the conversations I'm having is that to your point about like, it's not, okay, I did a case study and here's this 5 steps to enlightenment. It's these slow realizations with CIOs to understand the connection between the investments they have, the world they live in, like the influence that they have, the way that everything is connected, and it flips the model. So those are the kind of conversations which we're trying to have. And it's the systems level investing is the best instantiation of what we're talking about. Now, where I come in is applying these design principles. I'm like, this is really interesting and cool, and you guys are dealing with something that's innately human. I have this toolkit, right? Because like design is one of the most human and innate capabilities that we have. Like it's the ability to look at the world, imagine an alternative future, and do something about it. Like that's what makes it so fun, because oftentimes the people that work in the funds are very educated and sophisticated, but the board members, especially in the States, they're regular people, right? They're often, if you have a teacher's pension plan, you're like a teacher or you're a bus driver. So they have to manage this incredible complexity as a fiduciary with the weight of the world on their shoulders with like no formal education or background. So like, how do you take something as complex as systems and economics and like all of the stuff that we're dealing with and able to simply make sense of it? And that's where those design capabilities that I was talking about, like abstraction, synthesis, sense making, mediation, like you can just simplify the world, not oversimplify it, but just like say like, out of all this stuff, there's probably one or two things that matter, right? Let's just focus on that. What can we do about this? And let's go from there. And like, it's as much calming as it does give people confidence about the stuff that they're trying. So hopefully that answers your question as to why it's not really about ETFs or not. It's about like, what are you actually solving for? And how is that connected to the other externalities?
Yeah, great, thanks.
Rose, it looks like yeah, you wanna go in?
Yeah, I read a book a few years ago that was similar. It was coming from another direction to say, how can we use investing to drive system change? And I put it in the chat. It's a little different than what you're describing, but ends up in the same place. But the one question that came to mind, and it's kind of a minor point, but the point about design wanting information to be free, I find that really interesting because I think it depends more on context than the issue of design, although I'm not a designer. And so can you speak a little more to that? But you know, with the caveat, it's probably a minor point.
No, it's a great point. So 21st century investing. So Bill, like host of the conference that I was at. So Bill and John, there's like those two books are counterparts. Like one is sort of the theory, one's the practice. So as a side note, which may be of interest to these to everyone here, I'm co-editing a special edition of G, the Journal of Design, Economics, and Innovation on design and capital. And I think like it touches on a lot of these topics, but I say this because John and Bill are co-authoring an article for that. So it is very, very relevant. And I'm glad that you posted it because yeah, that the book 21st Century Investing is the how-to guide on if you're an institutional investor with no systems or design background. I think it makes it very, very accessible. Your question on information wants to be free. Now you're sort of jogging my memory, and I have to go back to my dissertation. I'll pull it up because yeah, and maybe I misspoke, and now I'm correcting myself. More information is better. I think that's what I was saying. Like the more information you can gather into that process. But you know, now I have to pull it up, and I'll try and share a screenshot of it so we can see the differences. But you are correct.
And so, yeah, as you pull that up, Jordan, I mean, and just building on Rose's question, I think there's a contrast to what you're saying as well, Jordan, because your dissertation opens up with the investment paradox, right? Mm-hmm. The paradox of choice. And so there may be something that you're describing, which is like the quality of information that you're feeding into this process makes a difference in the overall grand scheme of the goals and objectives, not just about competing on the market, but trying to get towards the ultimate outcome. So I think it's very relevant.
For sure. While I look it up, we can
sure. Yeah, no problem. We have Elena. So we'll come back, Jordan, when you found it, and then in the meantime, Elena will ask her question.
About 25 years ago, I was involved with a project at the Canadian Institute of Chartered Accountants about learning about risk and models of risk. And interestingly, only one of those models out of 7 was about operational risk. The rest were all about attitudes and the way choices were made. And at that point, they were quite interested in how do you audit soft information, which could have been either qualitative or quantitative. And I thought that you were getting at that a little bit in what you said initially about how do you deal with, the risks and opportunities of the stuff that's not easy to quantify.
And you're asking, how do you audit that?
Well, yeah, well, they were interested in how you audited that. But what I was interested in is what different models of risk, what part they played in the way you looked at capital design.
It's a great question. And when I set out to do the PhD, I was like, okay, I think I'm going to find traction here on the investment side of the organization, because anything that can help make their job a little bit more effective, they'll jump at. What I was surprised at is it was the risk people that came out of the woodwork and saying, no, like this makes a lot of sense. Why didn't you come talk to us earlier? Because we too are trying to grapple with making sense of less quantifiable information, but it's really difficult because they've got risk metrics and frameworks and dashboards and stuff that just like makes it very difficult. So they were intuitively struggling with it. And even what I'm finding in my conversations with investors at the total portfolio level is they said, we were all raised on models to build the model and to help the model dictate the decision. But what's happening is it's flipping, and we're actually using the model to validate the intuition. And it is almost more like how good science happens, right? Where like you don't just blindly do a bunch of research and then see where it points you and say that's the answer. You kind of have a hunch, like, I think this is the way the world might work, or I think this is a relationship that doesn't make sense. I'm going to go try and prove that. And so the model can do some of the validating for you, but it's never going to kind of give you that initial intuition. So one of the things that I was very conscious about doing in doing the research and the way I was presenting the work was being very humble to say, I'm not going to tell investors that they're doing their job wrongly, nor am I going to try and tear down these systems, which are rightly very conservative and risk averse. I mean, when you're dealing with people's pensions and their livelihoods 50 to 100 years, like you have to be very conservative. You have to be a good fiduciary. So what gives me a little bit of, I guess, confidence is the rigor of the process itself, that if you put new forms of information, I'm confident in the process. So like, because your question is such a good one, and it's got me thinking on how do you audit, right, information from the future, right? If you do some scenarios, you do some speculative fiction, right? Like information that'll help change our perspective. I don't know that you could audit it in the way that they're used to, but I don't know that that's necessary, because you do it in early enough on into the process that it changes what you're solving for, the metrics which you're driving success, your conception of risk, return, and responsibility, and how those things are connected, that the process itself is your audit. Mm-hmm. But what we're trying to do is put radically new forms of information into that process, if that helps.
Yeah, I think one of the interesting things is that the final model of risk that they talked about was, what do you do with intuition? Mm-hmm. Do you accept it? Do you deny it? What do you do with it? And the answers that we had come up with when we did the study was essentially a systems approach. Is you wanted to get as many perspectives on a situation in the room as possible and see what they all had to say and run some scenarios by them. And, unlike what's going on south of the border, diversity was something that was highly prized in, you wanted as many perspectives that had a real say in things, or who would be affected, to put their information in. And then sometimes the recommendation even included role playing.
Fascinating. That's an interesting way of looking at it. The way that I was thinking about it, and one of those 8 capabilities was abductive reasoning, where you know the outcome that you want to get to, but you don't know what the elements are, and you don't know the patterns of relationship between those elements. Like there's a huge degree of intuition in just what you pick and how you frame it. And even I think this was a question maybe Elena asked about capital, where she mentioned it, like what kinds of capital are there? And one of my PhD advisors, she wrote an article which I can share with everyone, about like eight forms of capital. And like having those conversations, like what is natural capital, what is social capital, into these very rigorous capital processes, it's remarkable to see how even people that haven't been trained, and like once they get over the initial shock factor, like, oh, this actually makes a lot of sense. I can start to see the trade-offs. I can start to see the kind of unintended consequences of what I'm doing here.
So that maybe brings a natural bridge back to the screen grab you shared, Jordan, about table 3.1, because in that you have plurality, you have epistemology. I don't know. Do you want me to share screen that, or?
Sure, only if everyone wants to talk about it. I just kind of dropped it in there as
Oh, okay.
as a reference of interest. But yeah, this was like me mapping why has this not happened before. So the way I said, like, well, let me define capital. What is capital and how is it commonly defined? And that's where you can't go defining capital without dropping in some Mark Carney value and values and Mariana Mazzucato and all that, just to kind of like, you know, as there's some Adam Smith in there too. You got to start at the beginning, but then saying, okay, well, why hasn't design had anything to say about what we consider one of the most transformational forces of the kind of the 21st century? So this was one of my early attempts to say, what are the barriers, and maybe there's something that we can do to, if not break them down, because like these tensions ended up in my final model of, once you have like choice making and decision making, and you have these 8 capabilities, in the middle are these tensions. So you can start to build a common language of, okay, I see, because, you know, maybe you're talking about a binary view of capital and I have this plurality, or maybe you're looking at agency in a different way. Like, are we talking about anticipatory or normative views of the future, and sort of like how we're actually making decisions? Though that was what this table was designed to do, is like a stepping stone to say, well, if there's a gap, can we bridge it? Like, where are the boundary objects here?
Gotcha. And I don't know if anyone is David Hawk, is that a hand up?
That's a hand up.
That's a hand up. Okay, yeah, sure, David Hawk.
And I'm not yet giving up, so I'm not doing this.
Okay.
Relative to the work, would you say that your mentality was more systemic or analytic as you were doing this work?
Can I say synthetic?
Systemic. Remember,
yeah, I know.
Something to do with systems, ideologies, etc.
Can I answer with it was synthetic?
Synthetic, if you want to, but that would be off track.
Okay, so maybe define as you're using them.
In essence, when we're talking about analytic, we're talking about people that like to make parts, and they make parts because they're in search of cause effect. So they're looking for the cause or the effect they encounter. So analysis becomes their mainstream process. And so they sort of love parts. They feel comfortable around parts. They pile parts up. Then they make presentations on which parts they think matter or which ones they're interested in, as opposed to the more systemic people, which there are very few. Those are a rarity. But the systemic people are more interested in relationships. That in fact, they almost forego parts because relationships are what matter to them. So they're always looking for relationships. And so I just wondered, relative to this work, which did you find more attractive, finding the right parts so you could understand cause effect in terms of, say, the success of a project or the failure of it? Or were you interested in systemic in terms of how things build relationships and how those relationships matter or don't?
Ultimately, so I definitely understand the difference between the two. I mean, ultimately, this ended up being a systemic or a synthesis of many things and ended up creating a new whole. But the article that I shared in the pre-read, the John Boyd, Destruction and Creation, I was stunned when I read that, and I read it after I did the dissertation, like how well it described the process. Like, it is this constant cycle of breaking it down and reassembling, and then once that reassembly starts to drift from the way that you observe reality, you have to break it down again. Like, it was this constant cycle where you're moving towards this like ever more descriptive reality. Like, ultimately, I am a systemic thinker. That's why abstraction is probably one of my most near and dear tools to what Zed was saying of, like, I love 2x2s, because, like, yeah, it's easy to write them off as very schlocky, BCG type nonsense, but there's a real depth to it, and it's a thinking tool because you have to hold opposites in mind at the same time and just sort of like put these buckets and archetypes into the world, and then you can start to work within those. Like I always try and simplify things to the degree, and this project, like it wasn't really, I didn't start it with the end in mind. Like it didn't even start out as, hey, I wonder what the role of institutional capital and design is. Like I thought initially strategic foresight would be a wonderful tool for infrastructure investors because they're dealing with long-term societal shifts, and right, like, and I'm like, well, that's interesting, but I think there's a lot of work here. It's neither original nor super relevant. So like, what if we take it at the asset class level? And I'm like, well, what if we take it at the institutional investing level? And then you start to peel away the layers to what we're talking about, the leverage points and following the money. It's like, oh, if we can redefine what capital is, what it can do, what an asset class is, what it means to have risk, return, and responsibility, what it means to actually create choices when we should be making decisions, or making decisions when we should be creating choices, like that kind of emerged towards the end of it. So it was a very kind of a creative process.
Yeah, I apologize. My questions will tend to be quite weird because I come from a very strange background. And in part, it has to do with being senior advisor to a number of major companies. One of the companies is the largest construction firm in Europe, which I've been advisor to for many years. And they, in essence, have emerged from using analysis. And in essence, synthesis becomes their major. And in order to demonstrate this, they have the leading professors from all over the world come and lecture their people at night in headquarters. So these people come in and tell them that this is the latest thinking. They particularly enjoy laughing at the Harvard people they bring in, but also there's MIT, Caltech, and a few around Europe they bring in for fun. And in essence, the reason they do that is to make sure they never do what that person argues for. So they put together their notes relative to what is being sold by academia at the time. And then that is to be ignored at all costs. And they are to do something else. Or a second firm, which is maybe even clearer, is the world's largest construction firm by far, which I've been their advisor for 15, 20 years. They do about $300 billion a year in projects. It's the 12th largest company in the world. And they have moved so far off of analytic cause-effect thinking in projects they do that they have switched from projects. They no longer talk about projects. They've switched to infrastructure. So in essence, whatever they do is relative to infrastructure being the connections between things. And so during 15 years, they grew from 30 billion a year to 300 billion a year by switching away from projects and picking up the idea of infrastructure, particularly infrastructure relative to preparing for climate change. And so in essence, they build major highways around parts of the world, getting ready for getting rid of air transportation. So in essence, how to have 300 to 500 mile an hour trains and pretend those are highways, but in essence, it's preparation for transportation that matters. And so for them, connections are everything. And
Absolutely.
so they don't deal with the parts. But those two companies, first is Bouygues, the ones that built the Channel Tunnel, which no one knows about, but they are anti-marketing in part because of a professor from Harvard, and they never market anything. And so their name is on nothing that they do, which they find extremely important. That's why the Chinese have them come in and make their high-speed rail systems, because in essence, they don't put their name on it. The Chinese pretend they did it. And it's a fantastic endeavor. The other one is China State Construction, which is a very outstanding firm in terms of not doing what others do and going for relationships. So those two are the examples that I speak from, and mainly from having advised them. But this leads to my final question, which is, do you evaluate these projects relative to their impact on their context in terms of what does that project do to the context. And for these firms, in all cases, the project harms the context. It will deteriorate the context. That's unavoidable. But then how to design the project to reduce the harm becomes the agenda. Do you ever deal with that in these projects that you're talking about?
So maybe to put things in context, I 100% understand. I think I understand the question you're asking. Just to what I was saying before about the nature of the research, where I assumed that there was sort of already a bodying of evidence and I could come out and have something a little bit more concrete, like 5 steps in capital design. There was none of that. So I have a lot of these conversations where we'll talk about the work and people say, great, how do I do it? Show me the case studies, like where are all the projects that you've done where you've instituted capital design and sort of like changed something. I would love to be at that point. I'm not there. I mean, I've only been a year out of the PhD. And this is why I'm kind of going to the conferences and speaking with people like yourselves and the systemic investors, because we need to build, like, field building is a pretty significant part of this. But at the same time, I don't even know that I would see it as a distinct project. Like, these are long-term conversations and mindset. Like, capital design and a lot of what design is really a shift in how you think about the world. Like, it's less about going into talking to a board and say, here's what to think, because they've got a million advisors who can do that. And it's probably, to your point, wrong or at least misleading. This is a more like existential, how should you think? And is this a different way of thinking? So I hope that there will be positive changes on the context, and I can already see some, not from the work that I'm doing, but like we obviously want to be improving it. But even in finding thought parties or kind of like sparring partners, it takes a very particular type of client to just understand, like, hey, like, I don't understand how the world works, neither does this guy, but like, I can be strong where you can be weak, you can be weak where I can be strong. And you enter into these like mutual learning, sparring, almost like kind of like shadow personality integration, where it is a commitment to mutual learning and a better mental model about how we think the world works. And like, if you can get someone who's like a CIO or a chief risk officer position, that's where I think you'll have long-term material change. And the implications chapter in the dissertation, I start to think about, like, what's the implication on institutions? What's the implication for design? But also, like, what's the implication for education? Because often I'll have people asking me, like, where do we get more capital designers? I'm like, well, they don't really teach it. Like, it's kind of not a common or even kind of like well understood skill set that someone would have to understand. And this is almost why I fell into design as a default, because it was the only field broad enough and permissive enough to allow me to bring in all these disparate functions together, like behavioral psychology, game theory, economic sociology, design, economics, like, modern portfolio theory. It's not that I was seeking out design. It was sort of like, that was the only school that said, like, sure, like, we don't really understand what you're going to be doing. But the business school was like, no, this doesn't fit. To your point about whatever Harvard says, do the opposite. They just like have their theories, and this was far outside what they were thinking about. But now they're like, oh, that's pretty interesting. Like, can you come speak to us? Like, well, it would have been great if we had this conversation a little bit earlier. Actually, to his credit, one of my advisors on my committee was from the business school at Illinois Institute of Technology, and he's like, we couldn't be more different because he's the editor of the Journal of Algorithmic Finance, right? Like, this guy is as quant as you can be, but yet he had this road to Damascus moment. And he sort of like understood that design could help people think a little bit differently. And he's been a huge champion in trying to bring it further into the more quantitative side of finance.
No, I appreciate very much what you said, that I'm very much with you. Maybe as a footnote on game theory, you may not have gone here, but for me, the work of Rappaport is the beginning and the end of game theory. Now deceased, but an old friend of mine in the systems world. So in essence, he was the inventor of tit for tat, which is the way to win at game theory, based on Scientific American's competition run throughout 2007, 2008, which is in all cases in game theory, what you should do is do the right thing the first time. Thereafter, do exactly what the opponent does. And then eventually they see how screwed up they are, and they begin to do the right thing with you. And so in game theory, he won every game they proposed relative to Scientific American. No one could touch. In fact, when he explained how he was winning, he won by a larger margin each time. And so with game theory, that was, Rappaport was the beginning and the end. Most people in projects don't do that and don't like that. The two companies I talked about do. They found the Rappaport thesis was quite delightful and a good way to screw up the competition, and quite fun. But somehow I wasn't going to say this, but there's a more tangible approach that I've been working on with a number of these companies. I apologize, but I used to be an architect, and I spent many years getting over that and trying to not design like an architect. Because at some point I discovered that architect, in essence, takes people into two-dimensional thinking and they never escape again. And so the stuff that architects do on drawings, even if it's on a computer, are extremely limited. And so I and the companies I worked with came up with the idea of how to ditch mind over matter, which is what humans think success is. And they think that's what makes humans humans. But in essence, relative to issues of climate change, we have to switch to matter over mind. We desperately have to get people to think about matter. So relative to some major projects, we allowed no drawings. There could be no drawings. And so the people that were constructing a project would design it as they were constructing. Because in all cases, as you work with the materials or the matter, you develop ideas on what you should be doing and opportunities that you missed out on. Whereas if you do the drawings or some silly designer does the drawings, you don't have the option of changing. You don't have the option of doing it better or doing it right. And so we developed this theory of matter over mind in order to humble those that thought they were great and great designers. And it's had amazing results. It's diminished an awful lot of designers, and those that actually do the work have in essence become the designers. And I didn't mean to screw you up with that example, but that's sort of where we're at. And that's something that's making a lot of their projects much more successful. And so if you're ever in Iowa, come visit my house, which I did that way. I didn't allow any drawings, no design, no specification of spaces. You just work your way through building it. And as you build it, you design it. And after it's all designed, you decide what space should be for what purpose. You do not predetermine any of that. And the results have been quite amazing. So think about that when you go through these projects, how to diminish the role of the normal specific designer that's doing some two-dimensional thing, maybe on his cell phone, which is two-dimensional life, and how to get into 3, if not 4 and 5. Sorry, I went in that last piece, but that's sort of where we're at with the companies, and they like it very much.
Yeah, I mean, it's funny you mentioned architects. We'll get to the next question, but like a lot of what mapping how designers think, the book I'm looking at, How Designers Think by Lawson, like kind of set like drawing from the architect world and like what is the process of design, which Case Dorst as well. Actually, Zed, you'll appreciate this. My SFI MRP was on like taking a systems more like a biophilic approach to urban planning, right?
Right.
Can you get a city, the autopoietic city? Can you build a city that builds itself? And a lot of Christopher Alexander, the architect philosopher, was heavily influential. But that's probably another session which we can talk about.
Yes.
That's awesome. Thank you, David Hawk. I mean, those are pretty profound philosophies to live by, and I always appreciate like the pepper that David shares in. But we'll come back to that. I even want to potentially see, just to throw it out there in advance, not now, we'll come back to that in half an hour, but does entropy play a role. I know David Hawk loves talking about entropy, and that comes up in the readings, Jordan. So we'll come.
I didn't mention it. Stop it. And
We'll
I
come
will
back
never
to it.
mention neg entropy to you,
Okay.
even though that's my passion.
By mentioning it, that is the definition of let's go to the next question, Donald, and then Michael after that. Oh, Donald, we'll just go on unmute and then you can ask your question.
There we go. There we go. Sorry. Yeah, I'm approaching this somewhat obliquely and maybe, but I see that, I should put, I'm seeing this as a kind of a competition for your approach. It strikes me from what I've seen, mostly from a distance, but I've seen enough of it, that a lot of people at the higher levels, when it comes to making decisions of any sort, but especially financial, consult their friends and advisors. They go to people they trust. They go to cases they know well. And they prefer that over any kind of construction, if you like, any kind of design or other methodology, which they think is probably just a bunch of buzzwords. Now, I don't know if that is still a prevalent thinking, but I think it is in some circles. And I'm wondering if you've run into that at all or found ways to address it.
Absolutely. Like the system has designed itself, so to speak, to be super resilient to outside ideas. I mean, think about a lot of this manifests itself at the management board interaction. So approaching it, I'm finding, just like I didn't expect that the risk professionals would be a great thought partner in this. Also, board and governance, either people that study and do board and governance or board members themselves, where almost the choke point is the CIO, the CEO, the CFO, right? They are at such a high level of authority that like they don't want to be seen as being challenged, but board members, like having the ultimate fiduciary responsibility, do want to get it right. And if you can help them understand what questions to ask the management team to really understand if they like truly mapped and understand the interconnected relationships of things they're doing, or you kind of get it, the people that are preparing the models and can put the narratives together about what it actually is they're doing. So I'm approaching it from both angles, because you are correct. People naturally go to people they trust and people they went to school with and have a similar mindset. And I'm also trying to make this design approach seem anything but radical. I want it to seem actually very intuitive and natural. And one of the things as we accept contributions for this, or as we work with the authors of this issue of design and capital, is saying, you have already done this in helping an institution develop their investment beliefs. You've helped a bunch of people manage complexity, navigate uncertainty, and like use this very intuitive approach to saying, like, we're going to put some objective investment beliefs about how the world works and what we're going to do about it. I'm helping make that explicit and make it visible and show like there's actually a lot of design that's already implicitly baked into that. And then by showing that, hey, like this person that we all know and respect and trust has basically done this with you, that makes it a little bit more accessible and acceptable into mainstream practice.
Interesting. Okay, thanks.
Right on. Michael.
Cool, thanks. Thanks for sharing this. This is very cool. I appreciate you sharing this with all of us. I think the thing that comes up for me, this idea of capital design and kind of what I'm picking up on it is, roughly where we aim to shape systemic long-term outcomes with capital. And I'm hearing mostly that it's about the movement of the capital itself versus like how the capital is made or what it's made of. It's not necessarily an alternative currency per se. It's the movement of the capital. And so through that frame, I'm wondering, not to throw this conversation down a rabbit hole, but do you have a take on the tariffs, on the tariff choices that are happening right now, and sort of the lack of design in that? Or perhaps there is a systemic view, layered very, very deeply that is hard to see. There's a mainstream view that I'm getting a lot of that that was a terrible choice, rooted in a very oversimplified notion that's not right about deficits always being bad. But I've also heard, compelling arguments that there's a deeper strategy here about, moving capital in different ways for specific outcomes, like building back the industrial base of America for the purpose of, people earning more money and more, community cohesion and those things. New trade blocks, all those things are kind of on the table with this conversation about tariffs. There seems to be, elements of there's a system involved anyways, maybe not systems thinking. And I'm wondering if you have a take on what's going on inside of the tariffs conversation through the lens of how you're thinking about capital design.
My take perhaps maybe unsatisfactory of like, I intentionally don't have a take because I'm looking at such a far distance of what is the cycle of history where we're at, right? And I think you could see this, and there's books like The Fourth Turning is Here and the, stuff like that, where are we with respect to trust in public institutions and sort of like the role of institutions in civic society, right? And so the way that I think about it is, and these are the conversations that I would have with pension executives, is like, what is your role in the fabric of civic society? And like it or not, you are now thrust more in a deeply uncomfortable way as part of the fabric of civic society. And why is that? Well, as a pension fund, you are the social infrastructure because you pay people's pensions. You are the physical infrastructure because you quite literally own bridges, roads, power plants, water companies, and stuff like that. And you're now part of the social infrastructure. So you can think about in Canada, right? There's this big conversation about should the pensions be investing more domestically? You see this in the States as well. Like, should we have a sovereign wealth fund? These are places that are deeply uncomfortable for pensions to be because they're risk-averse people and they like to do things just sort of quietly off to the side and not make a bunch of waves and not be in the press. So I'm looking at it like, where are the tears in civic society and what is going to mend that? And what are the reactions of the people growing up through these changes going to be? And how's that going to change the market opportunities in the future? So I think what you see now is people, perhaps like of Zad and I's vintage, where less and less seeking out risky career opportunities and more fleeing back to the safety of things that do have pensions having a little bit more stability. Because like, I'm just using this as a rough archetype, but like we grew up with a lot of change. So the one thing we're trying to grasp is just, even if it's a little bit boring, is stability and certainty. So like, what does that mean for institutions, right? So let's leave the next 10 years out of it, but 10 years hence, are you going to start to see things like the rise of sports clubs again, the rise of religion, like all of these, the rise of unions? I don't know, but like there's a way that you can start to make sense of those deep undercurrents, like the geological time scale. Actually, it's funny, I only mention that because I've got the Long Now Foundation's journal right here, right? And they've mapped like your classic structures. And when we talk about capital design or system level investing, oftentimes I'm seeing people say, oh, you're investing and you have to think about your impact on the financial, social, and ecological systems. And they're sort of equivocating the three. And I'm like, they're actually quite different in terms of like how long it takes for changes to materialize. I think financial is probably the quickest, social is in the middle, and ecological is the long term. And just like, how do we think about that as investors? So that's a long and perhaps unsatisfying way of not answering the question. I'm very specific about that because when you're in types of roles like perhaps we all are, like one of my roles was objectively to do foresight and scenarios. People are always kind of the newest shiny bauble. Talk to me about AI. What's going to happen? Talk to me about Bitcoin. Talk to me about, whatever. And I'm like, that's irrelevant to me. I mean, we're in the business, right? A quarter is not 3 months, it's 25 years. So you're paying me to not think about this stuff and to think as long as possible in sort of like a material and practical way for what does this mean? And maybe the answer is not doing anything. And I think that might be giving more credit than is due to the current situation to imply that there's sort of like any thought or grand strategy. But I just try not to get involved because there's more benefit for us having these conversations and like, what are the feedback loops that are hidden, but like there's residue accumulating and all of a sudden there's going to be a break point. What do we do, right? What types of institutions are poised to succeed? What types of investments? How does that change our conception of risk? Like, what do we need to start doing now? You could even see these conversations with a pension plan, like a defined benefit pension plan is for life. So what if suddenly there's a biotech breakthrough and people can live to 120 or 200? like all of a sudden your entire model of the liabilities, like you'd be bankrupt overnight. So like either you can start to invest into that trend, or you can start to put a cap on what you're like what it means to have a defined benefit pension. But like those are the things that actually will put you out of business is where I'm concerned about. I think tariffs are going to be hugely disruptive, but not existential in the grand scheme of things. Like that's one thing I always keep in mind. Like I've got the decline and fall of the Roman Empire, and we can see that the last period of, I would say, 80 to 100 years is the historic anomaly, right? Having this incredible period of relative global peace and trade, and it's not normal in history. So not to say that I don't absolutely love it, but it's sort of just reminding ourselves of where are we, things get better, who has been historically successful, what's the people that have always bet on there's always going to be a fundamental human need to be served, right? That's why infrastructure, most of the pension plans have deep investments in infrastructure, because humans have always had the need to move, generate, or store things. Like just stripped down to the, like abstracted down to that level, those are always going to need to exist in whatever context, in whatever like type of war or mistrust or trust or unity. Like you really can't go wrong on betting on these underlying fundamental needs. So that's where I try and focus, and that's through capital design what I help at least, bring like 10% of the conversation.
Any follow-up, Michael, or any?
Yeah, I mean, what comes up for me there is, yeah, like the thumbnail in my head, or the rule of thumb in my head that's popping up is like, don't follow the shiny objects, is one thing. And it's also about kind of properly weighting like the things that are in the present. There's a present bias when we look to the future. So I think, yes, the tariffs will sort of melt away. And it's also like, well, how do we properly weight it without ignoring it? And then the other piece that kind of comes up is I'm with you like deeply about like finding the functional values of what will be resilient over time. I think the way those values are represented or show up or land or are held there's huge variance in that. That's why capital design to me seems like a very interesting idea about like the different formations about how those values are held and interacted with, make or break society. And so, yeah, like really, this is the time, I think, in this very soupy stage of this happening, to really pare down into the functional pieces with some patience that the form isn't quite there yet. And so we look at the pension funds, and who knows what the shape and size of what they will be and what the relationships in those dynamics might be in the new articulations of those things that I agree with you are evergreen through these transitions. And then another part of me, not to hammer it too hard, but like there's also a chance that even at that deep level, new things are emerging. I sense that. And that's like, is this the end of history, or is this just a time of great change? I mean, I think regardless, we're going through a lot of change at the moment, but that's what's going on.
No, like that's a very helpful reflection. And I try and put things in buckets, right? You asked about tariffs, and I'm like, is this a certainty, risk, or uncertainty? And just even having those bookmarks, people conflate the three, and often people put uncertainty in the risk category, which essentially means like you're taking something that is fundamentally unquantifiable and unpredictable and doing yourself a disservice by applying some probability to make you feel smart or just to give yourself a sense of security. And it's like the tariff thing, I would just put firmly in the sense of uncertainty, and there's a whole different toolkit that then you would apply. So what I see happening is you're taking this uncertain, totally unknowable topic and using tools that imply knowability and probability, which is causing some of this cognitive dissonance. So it's like we're just having the wrong conversation and using the wrong mental models to even begin with.
Yeah. Last thing I'll say is I do appreciate, these are very tricky and unruly conversations, because money is so at the very bottom of like, it's the system under all the systems in my take. So I do appreciate when people go there, because it's hard to keep track when it bubbles up to the surface. Thank you.
Right on.
No, you're welcome. And that's where I came to this realization, like not alone, but like institutional capital is one of the most transformative forces of the 21st century. And that's why it was so surprising to me that design had really nothing to say. They had a lot of critiques about neoliberalism, but just sort of like understanding capital at its deeper level and what it is and what it can do. The thing that gives me the most hope, and I said this at the beginning, is like it is fundamentally a social system. It is a social construct that gets really a story about you and I telling each other about how we think the future is going to unfold. And if we both agree, like that's a market. So we're not ironclad bound by the laws of physics, which allows us, to your point, to change it. Like there's nothing set in stone about what we're doing here, which I think gives us a huge amount of opportunity because there's a whole set of tools in the field of design and systems thinking that have never been applied. And I think that they've been transformative in other fields. Why not throw it in here?
Yeah, cool. Appreciate it. I'll reach out.
Okay.
Please do, please do.
Right on. Rose, is it okay if I get Huda in first and then we'll come back? Okay, great. Huda, why don't you, go ahead. You can unmute and ask your question.
Thank you. So let me give you a little bit of context first before I ask you my question. So I looked at investment cooperatives, right? And they're basically a way for like enterprises to pool money from local residents and provide capital to local businesses. And like a great example of this that's provincially regulated are the SEDEF program in Nova Scotia. And I was just wondering that within like the overall capital system, there's institutional investors and there's, the investors themselves, but there's also the role of regulators like securities commissions, etc. So what does the role of design look like for these organizations, these regulators, because they are very restrictive from what I found especially in Ontario. They're very restrictive when it comes to, taking on risk, etc. So maybe if you have some thoughts around that, that'd be great.
That is a wonderful question, and it is outside the bounds of what I studied, and I'm not a regulator. However, I think there's something, a model or a framework that I put together that could be applied into different contexts. And that is sort of like the what are you solving for? And there are goals, forces, and constraints. So in an institution, like often just having these conversations because there's so many implicit trade-offs that are mashing together and you're getting suboptimal outcomes, right? The forces are kind of these external things that are pushing and pulling you. The constraints are like your history and your culture, and the goals and the goals are the things that you're objectively solving for. I think if to have that conversation as a regulator would be fascinating and long overdue. So one of the 8 design capabilities that I think are immensely useful in these contexts is the role of mediation. And that is, it's kind of like your T-shaped person where you're able to bring together the most salient concepts from multiple disciplines and package them in a way that is relevant for the people you're speaking to, as well as connecting the dots. Like you can think of this as like, this shows up as customer empathy in design, or just being able to kind of translate, you're saying this, I think what we're really saying is this. To be able to apply that within a regulatory context, I think is no different. You always start with what are you solving for? Let's just map that out. Like, let's look at the trade-offs. And often, I remember this was a heated debate at the time in one of our OCAD classes when we were sort of mapping the systemic forces around real estate and home unaffordability. And there was a lot of, I think, well-meaning approaches, right? Like rent controls to say, like, let's bring the rent down. And I was coming from an institutional real estate investor who invests in large residential properties. I'm like, well, you could do that, but also it's just going to make everything else unaffordable because no one is going to build any new residences. Like, I'm not saying I'm right, I'm not saying you're wrong, but like, let's just be honest here about the action reaction. And then, so we're not just at cross purposes. And that's kind of like we were at level 1.0 on the leverage. Like, let's move up a little bit here. So I think that's a great question. And if you want a future PhD research topic to understand the role of design in financial regulation, would be marvelous if you wanted to continue your studies, because I'm as interested in that as you are.
Okay, thank you.
Nice. Rose, you had your hand up.
Yeah, just you probably know this already, but just as feedback, the design of capital, like that, the title implies new forms of money. So CDCs, crypto, and because people are doing experiments in these things. So that's just a comment. And then just the other comment, I guess, is also to your point about existential risk, about how what would be game changing. I think in the near term, in my mind, tariffs aside, technological unemployment is in my mind might be in that category. And so not, I mean, welcome your comment on that, but just a kind of that's a reaction that I would have to that comment.
Sorry, I think you may have cut out the mic, something existential.
Yeah, so you had made a comment about an existential game-changing event, and you talked about an extension of longevity. And I would see technological unemployment as a nearer term risk that is, in my mind, in a similar category in terms of, and now, you know, some people would say, well, it's right here with tariffs, but I think that's, anyway, that's just another event that might make some of the issues that you're thinking about, like the horizon might be shorter.
I see. Great question. And going back to the point about trying to work with boards and executives about how to think versus what to think, the answer to that question would differ materially depending on what you're solving for. So for example, on OMERS, whose constituency is, I think, super exposed to technological obliteration, like bus drivers and firefighters and police officers and like people that largely work kind of with their hands. That's different than if you're kind of largely a sovereign wealth fund and you're making a long-term bet on the security of your nation based on overall productivity. So same kind of existential threat. One is an absolute boom and one is an absolute bust. And it would be working with whichever board to kind of understand the full implications of that, to put the strategy in place. And I think we talked about the difference between normative and anticipatory scenarios. And this is where I would say that's a relevant conversation. So for example, what we see is a lot of the big Canadian pension plans very well meaning to say, like, we believe in sustainability and we want to do what's right for the world. We are going to invest in transition fuels like natural gas on a way to this like brighter green future. Fantastic. What they ended up doing is actually locking in that technology for the next 50, 100 years. So by being anticipatory, say like, we don't know what the world's going to be, we're just going to like hedge our bets. You've actually locked in one particular type of future because they don't want to be on the hook for actually making a bet versus having a normative approach to the world to say, no, like we have enough market power, maybe collectively with our peer plans, we could just essentially force the market to skip natural gas and go straight to renewable energy. But that's going to take us all being collectively on the line. So the answer is going to look different depending on your context and sort of what your liabilities look like and what your country's natural competitive advantages are. But it's having the conversation on, okay, what are the frameworks? What are the models? Are we simplifying this and abstracting it to the appropriate level? You know, can we synthesize it? Can we make sense of it? Can we, you know, use it to have an abductive view on like, what is a better, do we have a better understanding about how the world will unfold given, you know, technological existential threats, for example? Like that's the way that I'm positioning capital design as a tool to help them make sense of what that means for their particular context.
Thank you all for the questions. And David, do you mind if I get a question? Well, do you mind if I get one in and then I'll go to you and we can
Yes.
wind down from there? Yeah. And maybe I'll channel some David Hawk in my question in terms of provocation. So, Jordan, I'm gonna ask you a question that's it's meant to provoke you. Okay, so I'm gonna ask you a question that provokes you. My question may or may not be something I wholeheartedly believe, but I'm gonna entertain the thought. And it doesn't have to do with your dissertation, but rather the field. So let's see how this goes. When you talked about understanding where we are in the blip of time, in the uniqueness of the society that we may have created in the last 150 years. You talked about the fourth turning. I also think about Peter Turchin and the wealth pump and intra-elite rivalry. The overall concept of the financialization of everything starts to seem like it's a perversion of the social systems that we've created. So then my question becomes, to what degree does your emerging field of capital design rest on that premise? And have you had to contend with the challenges of questioning how much of a perversion that is and whether or not there's a course correction to the tangibility of reality and returning to reality, or as David Hogg said, returning to the third dimension and fourth and fifth, etc. Do you ever have to wrestle with that internally or in the work?
So I feel like we're entering the matrix here, and you provoked me, but I have my calming L-theanine tea here. So when I was looking into financialization and the ability to turn almost anything into a financial instrument, I asked, why is this happening? Right? Did a bunch of bankers just decide that this was a fun thing to do? Or is it actually a response to something deeper? And I started to see financialization and the lingua franca of money and value as the natural and almost inevitable response of society to an increasingly complex world. I mean, money is the one way that you can compare almost anything, even things that are wholly inappropriate to compare. Right? You can compare the value of an Amazonian rainforest tree to a human life, to a bottle of orange juice through the lens of money. And like, so when I look at it through that lens, I agree that it's a perversion and that we need to really think hard about what are the implications of it. But then I also think of like why this happens and what is the conversation about that? Like, because of the incredible progress we've experienced as species over the last 1,000 years, like financialization is almost this, dare I say inevitable, but like a natural response. Like, how do I compare this thing across the world to this thing that's right here, to like across time scales, across types? And it seems like financialization is actually like a relatively elegant way of doing it. Like if you were an alien coming into the world and you're like, wow, these people have assigned a price to everything and you can almost trade like all of these things. Like, wow, what a clever invention they have. So like that's what is in the back of my mind. And I'm like, well, maybe if we change the definition of capital or the way that we value things or like what price means, you have to ask these deeper questions about the nature of humanity. Like, are we fundamentally a market species? Like, is there going to be an element of trade in everything we do? I don't know the answer to that question, but I have some thoughts. So like I'm operating and I'm trying to dig into these like deeper premises. So it's less about financialization. And it's just like fascinating the way you can map that. But financialization as a response to an increasingly complex society. And there's some fascinating research which I can share where they looked at farmers during the fall, like before and after of the Soviet Union, where just like their language and like people in Kazakhstan who had no connection to the outside world had a very limited vocabulary to describe the things around them. And then they looked at like the farmer's brother who had maybe like gone to different countries and seen different things, and like their vocabulary starts to expand and like they're able to think more abstract thoughts, like think about things that are outside of their immediate vicinity. And then they started to like build a theory based on that. And financialization is sort of like the natural extension of the lingua franca of our capitalist society. Like that is the one universal tongue that we have.
That is a very elegant way out of the question, Jordan. I appreciate that because essentially what you're saying from your perspective is the financialization aspect of what we do is a byproduct of the complexity of the time that we live in, and it's a byproduct of the world that we've built. It's not the set out intention. Whereas the frame of my question was like, why is this? Why is the financialization of everything becoming so perverse? And your description is it's a perspective to hold that attributing a financial value to something is a shortcut to make sense of the complexity. And I find that an elegant answer, and perhaps in part two, we'll dig in more to that.
Well, I guess the answer to your question, you like would whatever your answer to that question is, would be your answer to like are humans like are we Hobbesian or Rousseauian, right?
No, fairly said. I think this is why it's so fascinating, and it goes deeper than just as Michael was saying, than just it's how we humans attribute value to the world around us, and it starts to ask fundamental questions. So we are winding down, but why don't we go? Actually, Kelly has her hand up, and she hasn't asked a question before. David Hawk, is it okay if we go Kelly, David, Elena? Is that order okay?
That's fine. Kelly always does this to me.
Okay.
Hi. I mean, at the risk of coming in late and not having the full context, I did want to comment in terms of putting a price tag on everything. I think that from one of my first jobs was on pricing and the artificiality of pricing, as the same product can have different values. I'm in the process of submitting to RSD 14, and part of it has to do with the free market. Part of the reason why I wanted to put in this component was to take away the value piece of items for things that are freely given. So I don't know if that makes any sense because I haven't caught the back end of or the front end of this conversation.
Is that a question or?
I think that is having listened for the 15 minutes that I've come home in the background, I just wanted to make that, I guess it was a comment against what I was hearing.
That there's different price attributions can be ascribed, different price points can be ascribed to different items.
Same item.
Yeah.
The same item, and it could also be zero, but the
Right.
item hasn't changed.
I mean, you're completely correct. Like, I think someone said, like, what is the valuation? But like a number from today multiplied by a story from tomorrow. And that is a lot of what prices are. Now, I don't necessarily hold the keys to this answer, but there's a lot of very smart people on this call that I'd welcome views on that as well. Because it's an interesting topic into this concept of multiple forms of capital. Natural capital is one thing that I'm almost seeing going the opposite way, to say, like, we have this freely given resource of, the value of a wetland and flood reduction. Maybe we should start valuing it because that's going to get people to pay attention to preserving it in its current state. That's an emerging field.
For women's traditional work. I don't think that we're there yet. But I shouldn't jump in this late in the conversation. So I'll shut up and let David Hawk speak.
No, it's all good. I think that contributes to, some of the frameworks and discussions we've been having. So thank you, Kelly. David Hawk and then Elena. And for David and Elena, just we're winding down, so maybe just try to keep it a little tighter.
I'll try to be quick.
Okay.
I have a dissertation topic for Huda, and Jordan is going to be her advisor, supervisor. And so and I'm going to end on a really sad note. So I will shut up at that extremely sad note. 5 years ago, I put together a project for Newark, New Jersey, to take several blocks of Newark that were mostly abandoned and turn them into a regulation-free zone. So within that zone, there would be zero regulation, local, state, federal. And I had all the right people on board. The Republican governor was fantastically for it, putting money into it. Ended up with 30 companies wanting to come into that zone and build or make something or create a company with zero regulation in order to show society what could happen without the normal faulty regulation. So it was really on a roll. And then because of a major project I had in Sweden, I had to leave for a few months and go deal with that. And when I came back from Sweden, even though some magazines had written up this project, and I thought it was going very well, I found it had been moved to Atlantic City, New Jersey. And so I went to meeting with a person who had brought it to Atlantic City. And it just happened to be this guy you may not know of called Donald Trump. And so he and I had a meeting over this project, and he explained why he wanted it for his casino area and the area he's going to buy. based on that, I canceled the project forever and went back to the governor and gave the money back for the project, told the 30 company CEOs to forget it. It's a pile of shit based on what a certain person wants to do with it. But in essence, that was a project to demonstrate that a great deal of regulation is flawed. And in order to do a better job of doing better things, we might try regulation free and see what people would do if they got to do what they really wanted to. And then based on that, we made a distinction between lawful order and legal order. Lawful order is cosmic order and the laws of the cosmos. Legal order is the stuff that lawyers, politicians, whatever, put together to crap up things. And so this project was to demonstrate the difference between the two. And we were on a roll until Donald entered the scene and in essence killed the project with the stupidest of stupid ideas. So if you'd like very much, Huda, we could chat about how you could restart that someplace. Because at one point, the CEO of Walmart wanted to do that. And I worked with him part-time for 2 years to build a city someplace in the US to demonstrate that. Of course, he screwed it up by wanting it to be next to Las Vegas and not in West Virginia, where I thought it should be. But nonetheless, that distinction is a very powerful basis to do a dissertation and more than a dissertation. And it really fits very well with what Jordan's been talking about and working on. I'm very impressed with his work. And I think Huda would quite enjoy doing that topic. Sorry, don't be impressed.
Two topics, 2 for 1 in one call.
Sorry for the Donald bit.
No, it's all good. Thank you, David. Always appreciate the lessons behind lawful order and legal order, and I think there's a lot in there. Thank you. Elena and then Donald, maybe just slightly shorter questions, and then we'll wrap up.
This will be a little bit quick. I'm wondering about the impact on individuals of financialization, where, especially with respect to their presence on platforms, young people are being urged to brand themselves and to only pursue the things that will contribute to their branding and therefore their later success. And I'm wondering if that isn't too constraining on their imagination, their potential for creativity, and eventually their prospects of happiness.
So I was in Chicago last week, listening to the PhD defense of my colleague Dia, and he did his dissertation on this. It's called the strategic choice making, but the mashups between infrastructures and platforms, and it gets to, I think, the crux of what you're asking, and he handled it in a way more elegant way than I could. But a lot of our thinking, because we did the program at the same time, was intertwined and interfused. So I think he like that would be a fantastic question for him, and he's explored it in a sort of a really rich and nuanced way in different contexts, both in sort of the North American and the Middle Eastern context as well.
Oh, could you put that in the
yes,
I
certainly will.
And a last quick comment is have a look at Buckminster Fuller's design for Old Man River City, based on his ideas about a livable planet.
I will. That sounds familiar because I was looking at I think the book's called Order Without Design, Inventing Future Cities. The guy Michael Batty on basically what would a systemic sort of emergent approach to urban planning look like if you were to have a city develop itself based on this like parts and wholes and that type of thing. But we're all talking about the same type of like interesting stuff when it comes to the built environment.
Mm-hmm. Wonderful. Thank you, Elena. Donald?
Yeah, I'll be quick. This is an observation I made. Last summer we had Lynn Rasmussen on, if you remember, talking about her book Seeing. I finally got a hold of a copy and I was reading it the other day, and I noticed a comment in there, a statement, not a comment, which I think is applicable to a lot of the discussion tonight. She said, information is not a thing, it's a process. And I think that applies to financial information too. And I think that's a mistake a lot of people make, right? And they get not just too conservative, they get too greedy, they get too reactionary. They don't get what they're really doing. That's it.
Mm,
I love it. That's
yeah,
great.
Yeah.
that's very interesting. Like a process philosophy applied to information, and for the purposes of decision making or otherwise. Yeah, that's
Mhm.
really interesting.
Mhm.
I think Jordan, you can see even from the intimate group here, there's a lot of enthusiasm for this topic, and so I would love to even like continue this and go into this next rabbit hole that we were on the cusp of, to be like, what is the nature of unplanned capital design, non-planned, non-intended, what does that look like, and so that could be a fun part two combo.
Yeah, no, I appreciate all the thoughtful questions because I'm fascinated when your kind of the work is reflected back onto you and people say, oh, what about this? And I'm like, I didn't think about that. That's fascinating. I'm not even qualified to talk about that, but let's like build a community, build a field and get this
Yeah.
rolling because I want capital design, or just like the underlying principles of capital is this massively transformational force, but at the same time, it's a fundable social system. And we have a really interesting set of tools to map it, make sense of it, change it and shift it and adapt it to what I think ultimately we want to be positive ends. There's a massive opportunity out there, and I think it's a story, particularly on the institutional investing side. I think I can understand a lot of the criticisms and the poor outcomes of capitalism as a whole, but there's like the shining potential is in these long-term, really well-aligned investors that are in it for the right reasons, and I can say that because I have worked in there and I know these people, and like they are by law bound to doing the right thing, but it's not obvious that that's happening because it's at such an abstracted layer from anything that we would deal with on our day-to-day basis, that the more light that we can shine and the more of this thinking that we can bring to that audience, I think better for everyone. So thank you.
Yeah, I mean, thank you for joining. And so, Jordan, maybe the last point, or maybe just in 60-second wrap up, the question that I ask a lot of our guests is like, because we're at Systems Thinking Ontario, we try to take a systems view of these different topics. What are the final reflection or parting reflections you can give for how does, either what do you hope for, or how does capital design, like, strengthen your systems thinking muscle, or what can systems thinkers kind of take away from capital design? Maybe you can leave us with a parting reflection.
Oh, trust your intuition. We talked about intuition, the auditability of intuition and the role of intuition in systems. I can understand that it's not the obvious, like it's not natural for a lot of people. It was intuitive for me. I also failed calculus in grade 12. So I'm like math doesn't come easy to me. Systems came easy. And that's where I see the affinity between design and systems. And I know there's a lot of deep thinking on like complexity theory and like systems at the nth degree, but whatever we can do to simplify it and use that human intuition, because people kind of feel that everything's connected, and just like help mapping that out, help draw it out. That's what we can do as service to kind of bring the fundamental tenets of systems to the kind of our friends, our neighbors, the people that we work with, to help the conversations that we have here become normal around the dinner table or at the coffee shop. Because I think the more that people are aware of the broader implications of their actions and their trade-offs, the better.
Wonderful. Nicely said. Thank you. Thank you so much, everyone, for joining tonight. Thank you, Jordan. Round of applause for like spending your valuable time and sharing these insights from an incredible dissertation. I mean, I know we all haven't read it thoroughly, but I think
Please
a lot
don't.
of us.
Please, I'll read a shorter version.
I know a lot of us are interested. So, well, we might disappoint you, Jordan. We might read it actually. So
here's the any dissertation, flip right to chapter 6. That's the
right.
contribution. So yeah.
Thank you again so much, and we'll be on again for the month of May. We're aiming to actually be in person. We've done a couple of virtual, so we're aiming to be in person. TBD still on exactly the topic, but if you follow us online or keep posted, David Ng or myself will share out the notice, and yeah, we'll hopefully connect again on the next Systems Thinking Ontario. Thank you very much. Thank you, Jordan. Thank you, everyone. Have a wonderful evening.
Take care.
Take care. Bye.